And a look at our top stories. Time now to see what's making business and financial news. Catherine Bennett joins us in the studio. Morning to you, Catherine.
Good morning.
Yesterday, we saw Pinterest joining the stock market with some surprising results.
That's absolutely right. Pinterest had its first day of school yesterday, and it can be pretty pleased with how it went. Pinterest stocks were initially priced at $19 a share, making the company's market value $10 billion. But over the course of the day's trading, its stock continued to climb, rising almost 0.33% to trade at $24.40 and boosting its value to $16 billion at the close. Pinterest is one of a number of tech companies coming to market this year. Ride-hailing app Lyft debuted in March to a poor showing and a rapid decline in its stock. But Pinterest's success shows that investor enthusiasm for tech IPOs hasn't diminished. Now let's take a look at the markets. Markets in Asia started mixed this morning. The Nikkei rose 0.5% and the Shanghai Composite made a jump from earlier trading of over 0.5%. Hong Kong's Hang Seng Index is closed for a public holiday. Major Europe markets are also closed today for Easter. Uber has valued its self-driving unit at $7.25 billion ahead of its initial public offering. This comes as Toyota, auto part maker Denso, and internet company SoftBank invest $1 billion in Uber's technology unit. The Japanese company promised to inject up to $300 million over the next 3 years for Uber's self-driving car development. Amazon, the world's biggest publicly traded company, is scaling back its operations in China. It hasn't been able to break the dominance of local e-commerce rivals such as Alibaba and JD.com. Amazon is instead pouring huge amounts of investment into India. Nick Rushworth reports.
Giving up on the Chinese market, albeit partially, Bloomberg reports e-commerce pioneer Amazon will, from mid-July, close its domestic business in China. Amazon hasn't explicitly confirmed the report, but issued a statement saying it was making operational adjustments to focus on its efforts on cross-border sales in China. That means it will feature only diminished offerings from its global network. Amazon started out in China 15 years ago with the purchase of local online bookseller Joyo.com. It rebranded as Amazon.cn in 2007. And partially pulls the plug now on China retail operations after failing to make headway in the local market. In Q4 2018, Chinese business-to-consumer online retail was dominated by Alibaba, which had more than 60% of the market, and JD.com, which had around a quarter of the business, compared to Amazon's 0.6%. Local players have capitalized on domestic supply networks and appear to have a deeper understanding of how to connect with Chinese consumers. The move is seen as a sign Amazon will focus in Asia on its Indian customers. The trillion-dollar company opened an India website in 2013 and has invested heavily in operations there.
Let's take you through some of the business headlines this morning. The United States-Mexico-Canada agreement spells good news for economic growth in the US, according to a report released on Thursday. The revamped NAFTA agreement would increase US GDP by 0.35%, according to the US International Trade Commission, and would add on another 176,000 jobs. In more good news for the US, retail sales jumped 1% in March, the highest rise in 18 months. This outstripped expectations of a modest 0.4% increase. The rebound in consumer spending on things like vehicles and clothing is a positive sign for the overall health of the US economy, which will be posting first-quarter growth figures next week. Nissan has announced that it is going to reduce its global production by around 15%. This marks a break with Carlos Ghosn's style of leadership. The former chairman was known for his strategy of aggressive expansion. The Japanese firm plans to produce 4.6 million cars in the current period to March 2020, its lowest figure in 9 years. And there was a bit of an embarrassing moment for the French government this week. The Élysée launched a French-made messaging app for government employees called Chat. Chat is meant to be more secure than apps like Telegram or WhatsApp. But there was a bit of a hiccup. It only took several hours for a French cybersecurity expert to work his way into the app, simply by tacking on the government email format @elysee.fr to his personal email address. He immediately notified the government with a tweet tagging Emmanuel Macron and asking, "How can I get in touch with you? It's very, very urgent." And that wraps up the business news.
Very, very urgent. What a cliffhanger. I want
Right?
to know. All right. Thank you very much, Catherine. Catherine Bennett with a look at the Echo News.